Hey, everybody, quick one from the road here. I've been asked by a number of people to give my point of view on the Tesla earnings. And also, this is much more about the Tesla game plan, not just the earnings. So sorry about the little maybe poor audio, etc. But let's jump in. So first of all, to talk about the earnings itself, there was a lot of stuff that came out in the earnings call. I was going to talk about some of the comments that Elon made that I thought were most impressive. One, the Model Y obviously is the best-selling car in Europe right now, not only BEV, but also car, and also the best-selling vehicle that's not a pickup truck in the United States, which is huge. The macro environment, of course, they stress very uncertain. There was a cool piece about how interest rates increase the cost of a car. Every time they raise a quarter of a percentage point, it makes a car more expensive. That's hurting Tesla, but it's hurting everybody as well. They did talk about the operating margins. They are still among the best in the industry. They are the best in the industry, despite reducing prices early in Q1, and they continue to reduce prices. And they're laying the groundwork for autonomy to generate lots of profit through vehicles. Basically, their goal is to get as many cars on the road as possible. They were talking about Cybertruck as well. They're building out versions on the pilot line, the alpha version of the Cybertruck, and there will be a delivery event in Q3 2023. So literally, we could be seeing Cybertrucks coming off the line in a matter of weeks at this stage. And the demand for this product is insane, 1.7 million. They also spoke about Megapack, huge progress there. Deployment reached nearly 4 gigawatt hours. And this stationary storage, they did stress as well that growth will exceed vehicle growth as well. Autopilot and FSD, huge news there too. I think they mentioned 150 million miles driven by FSD, and they are ramping up NVIDIA GPUs and Dojo, and they believe they could actually turn Dojo into a potential like AWS down the line, worth hundreds of billions of dollars, but there is risk, and it is years out, but that is another thing that was one of those secret nuggets in the actual call too. Basically, they want to sell as many cars and as possible as quickly as they can. Zach also said a couple of things. Auto gross margin, I think, and reduced operating margins, but still very healthy levels, market leading. Berlin and Austin costs are coming down as they scale. And storage business is really ramping up too. But let's get into some of the more interesting stuff as well. Tesla's order pricing adjustments are being very actively managed. Sometimes they spoke of having real-time information. Literally, they can tell exactly how many cars are produced and how many cars are sold all over the world every single day in real time. No other company has that. Sometimes it takes them months to hear back from dealerships as to what's going on. Tesla hopes to provide more guidance on the storage business. Again, this is the Megapack business, which will be huge later this year. And again, it's going to be a very big business. I think their deliveries have grown by 350% year over year, which is huge. Tesla is on track as well to achieve steady state targets for the end of the year from the Austin ramp. And of course, Cybertruck will be huge in Austin too. And expectations is factories will hit their cost goals despite uncertain macro environments. There was a couple of questions that came in from different analysts as well. Oppenheimer asked about cost structure that is variable on cars, and they expect, Tesla that is, they expect to see improved cost from contracted volumes. They're renegotiating new lithium contracts and stuff like that. Baird asked about Dojo and how Tesla ranks versus the rest of the business, and Tesla stated that they look at Dojo as a long shot bet, but solving sustainable energy and autonomy is their huge focus. And on pricing, Tesla looks at previous day orders, etc., and they modify prices accordingly, which is huge. Emmanuel from Deutsche Bank asked, I think, about Tesla's pricing strategy, and the company stated that they need to maximize volume and fleet and monetize over the life cycle of the vehicle. Think about that. And there's a lot of hidden stuff there, but think of connectivity, think of charging, think of FSD, whether paid all in advance or monthly. That is all included in high margin revenue from the life of the vehicle. Also, George from Canaccord asked about FSD take rates, and they didn't talk about that specifically, but the FSD beta improvements are dramatic. I'm sitting in one. I use it every day. Literally, I just let it take me wherever I want to go. And there's very little intervention required these days. And it is super safe, super smooth. There was a question from Piper Sandler. They asked her when Tesla's facility would be close to full utilization. And the company replied that it should be the latter half of this year. I assume they're talking about Austin and Berlin. But some of the key and the most profound remarks, I believe, from the earnings call were orders are currently in excess of production. Elon said, if things go well, we have a shot at 2 million vehicles this year. Not the 1.8 million that expected, but that's an upside case. Again, no guarantees, but very, very confident. Remember, this stuff is scaling. They technically are at 1.85 million scale right now from my numbers. Energy storage will be huge. FSD, this is probably one of the biggest things as well. You did say FSD could be ready by the end of 2023. That would be mind-blowing, okay? Once that happens, it's game over. Robotaxis, etc., massive value. But even conservatively saying till the end of 2024 is still massive news. Anyway, Tesla also, they did mention they can sell cars at zero margin and still make world-class margins through FSD. That is big, 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 big news. Also, the margin profile for Austin and Berlin will not be as high as Shanghai, but they will make strides every single quarter. And of course, first Cybertruck deliveries are expected in Q3. Very big news. And of course, I mentioned the interest rate news at the beginning. But basically, you know, the reason kind of I am in Tesla is I believe it could very easily become the world's most valuable company. And you don't see it in days like today. But again, a lot of good stuff. So what essentially is Tesla up to? So when I think about this, you know, their game plan, and, you know, they are so strategically smart. The average ASP, let's talk about prices, despite all the cuts, it's only, I think it's about $47,200 right now. And that's only $1,400 less than the pricing was for the models on average in 2021. Other stuff to bear in mind is Ford loses, I think, about $34,000 per vehicle. Tesla still makes $10,000 per car. Nobody else touches that, except for, of course, Ferrari, perhaps. They also say Tesla's having the Cybertruck delivery event in Q3. They pounded the table on that. So that is the biggest pre-ordered car in the history of the world. 1.7 million people. They have a line of customers for this vehicle out probably to 2026 or further. Model Y, as I mentioned, best-selling car with the exception of pickups, and number one in the EU. Also, it's now less than a $40,000 car in the US with tax breaks. That's $10,000 cheaper than the average ASP for an American vehicle. It's insane. And this car can drive itself. Riddle me that. Also, I think regarding the financials, you know, they are ramping their energy storage business fast. And that means that the revenue from car sales has come down to 85%, and about 15% comes from other sources. So overall, the business still is getting 19.3% margin. Wall Street was expecting 20%, and they did get dinged by a large FX exposure, which sometimes happens in quarters. But margins, again, are still better than all automakers. Orders are in excess of production, and they still have a lot more pricing power in hand. Also, well, some final notes, just thinking out loud here. Automakers do not have perpetual revenue generators, with the exception of servicing for the cars that break down all the time. But think again, charging, FSD, connectivity, they can turn this stuff on soon, real soon. Elon says towards year end, FSD will be ready. I think that's optimistic, but who knows? The scale of improvement, every single release is mind-blowing. Again, energy storage, I think the revenue is up 148%. Delivery is up 360%, which is nearly 4 gigawatt hours from a year ago, which is huge. And their mission is simple: get as many cars on the road as possible. Crush the competition. Without saying crush the competition, that's what they're doing. And if they do get FSD finished by year end, that's it. That's game over. Checkmate. Competition are suffering. They have huge inventories. I think it was Lucid have 9 months of inventory sitting on the lots. Ford are suffering from people returning the F-150 Lightning, and they're just not selling. GM sold 2 Hummers, as we know, last quarter, and the competition are just suffering. They're bleeding out. They're not even making money on these cars, and they're losing money on the ICE cars too. So bankruptcies are coming, no ifs, ands, or buts. And real simple, to sum it all up, growth and domination at all costs. And I think Elon did say as well, he's focused on more global expansion, going to countries where they haven't been already. So nothing but goodness here. So for those that wanted me to do a quick summary of what I thought of the earnings, that was it from a Tesla on the road. I'll see you guys later. I'll do a quick news recap as well regarding crypto markets later. But I'm trying to keep my Tesla stuff and crypto stuff separate because some that like crypto don't like Tesla and vice versa. So appreciate you all. This is good. Despite the weakness, people say stack sats. I personally stack sats and Tesla. Thanks all. Bye.